Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner, and this is where we make investing fun, simple, and real. I'm joined by my great friends, Corey Halliday, Noah Davidson. Guys, thanks for being here once again.
Thanks for having us.
Awesome show. We talked a little bit about this show before. You know, we don't just come in and wing it all the time. But sometimes we do. But really an important topic and the potential for you to make some decisions that can be life-changing. You know, they say today is the first day of the rest of your life. Tomorrow can be different than today. And I think our discussion will likely lead many people to change their lives for the better. It's a great discussion. It's a big picture discussion. We're going to speak a little bit about power, money, and this is brought by the antitrust with Google. And antitrust is a big thing with publicly traded companies. The first one I really witnessed was when they went after Microsoft. Before that, AT&T, they broke up Ma Bell. It's a really interesting thing, antitrust. So it's a great time to talk about what that means for you as an investor, but more importantly, it's really about a theme of conglomeration of power and control, monopolizing things, and what you do to deal with that in your own life. So it's going to be a really powerful session. Who'd have thought that antitrust would be life-changing? It will be. Click the like button, click the subscribe button, get notifications. Apparently there's a bell that does that for you. That way you'll know when we produce new content. This is actually more important now because, you know, Corey and Noah have such a great pulse on the market and where it is and the nature of things now. You'll want to be notified when we have important things to talk about. The other thing is, and I'll go ahead and plug this a couple times, is go to yourinvestingclass.com. Sometimes it's a class, sometimes it's an ebook. Right now it's an ebook, it's free. And that ebook is a step-by-step guide to start action. It is so good to get away from Netflix or get away from scrolling and you know, be in forums like this where you're learning more. It's even better when you can take that information and do something with it. And, you know, if you were to evaluate, you know, if you're a podcast listener, I don't listen to a lot, but there's certain ones I don't miss. You know, I always try to say, what's my ratio of listening to action taking? You know, am I just listening and listening and listening, or are these things I'm learning actually causing me to do different things in my life, or am I just edutaining myself, you know, with edutainment? So very, very important. If you would like to be an action taker and increase the ratio of action as opposed to just listening information and doing something with it, that go to yourinvestingclass.com. It's free, and you will begin to be given tasks that you can do weekly, once a week, that are going to change your life. That I can tell you for sure. So with that, quick introductions for those listeners that are new. Let's start with Noah this time.
Well, Andy, I'm a 28-year veteran of the markets, and I have been a coach. I have been an advanced trainer. I have been a mentor, and I've helped countless people learn how to take action.
Well, there you go. It's all about action today. There you go. Corey.
Yeah, I got started in the markets, went through kind of the traditional getting licensed, worked my way up the ladder, eventually became a Series 4 option principal, which is a head of option trading. Did that for, 10 years roughly in that arena. And loved my time there, but very high stress and just a lot of time. I had some younger kids and wanted to see them once in a while, so I retired from that, got into managing my own money, and I have been with the Cash Flow Academy for years and years now, and just absolutely love the education space, the ability to mentor and help others to learn these principles and improve their lives.
I love being with you guys in the Cash Flow Academy. This is my favorite day of the week, is when we get together and I get to learn from you guys. And this will be this is a really important topic because it's about money and power. And whenever you have a fight over money and power, which is really what an antitrust lawsuit is, we're talking about what people perceive as fairness. We'll talk a little bit about that in the first half before the break, but in the second half, we're going to talk about what this means to you, because, you know, what did the Microsoft antitrust mean to you? What did the AT&T? I mean, you had more choices after that, but in reality, there is a lesson to be learned here that is massive and unnoticed by most people. And it is a perfect opportunity to discuss that lesson because it's life-changing for sure. So what seems to be, things aren't always what they seem to be. And what seems to just be a little discussion about antitrust, they're going after Google, trying to break them up, or why, or the Europeans, or whatever. There's actually some lessons to be gleaned from this in how the world shapes up and operates that is absolutely key to the smallest investor, the guy just starting out listening to the podcast. It's a big deal. So, Noah, bring us up to speed. What the heck's going on with this news?
If you were to go look at headlines, you're going to see a few headlines about the case, U.S. versus Google. And they've got an antitrust case for a couple of things, for their search engine practices, for their advertising practices, for their app store practices that have just been dominant and controlling and anti-competitive in many, many, many ways. And so that is an interesting problem. And this is not a new problem in the world. This is an old problem in the world. It's been a constant problem. You can go back to, like you said, Mobil, Standard Oil back in the day. And historically what has happened is they've broken those companies up, and then those two new companies go crazy. Yeah. And in other situations, they've broken companies up that would have probably toppled anyway because competition got them anyway.
Yeah.
So, I mean, if there's pros and cons to breaking up an antitrust type situation. But at the end of the day, I think it's kind of like the little Dutch boy sticking his finger in the dike trying to stop the flood control. Because you got, I mean, if it's not Google, who else is on? You got Amazon. They've taken over and they're killing off their competition. You got the Walmarts of the world killing off their competition. I mean, there's a huge amount of power consolidating up at the top, and I think it's one of those situations where that's a problem for the average person. And if we can't if we can't beat them, we're going to just have to figure out how to join them.
Yeah, it is interesting.
This has been a problem, like you said, for many, many years. And the idea is, in business, it's supposed to be legitimate. Like, if I beat you at business, well, I was just better than you. But they shouldn't have the advantages. Well, companies, I mean, if you read about Apple, Steve Jobs was trying to create an ecosystem where you had to stay inside of Apple, right? You couldn't get outside of it. You had to have their chargers and you had to have their things. And we're all stuck in that. And so these big corporations, in many ways, if they see a competitor, they'll gobble them up. I mean, Facebook bought Instagram, which was one of the great purchases because they saw competition. And so Instagram is probably bigger than Facebook and more popular at this point. And so you look at how these big companies get bigger and bigger and why this is a problem. Well, the idea is it's sort of the Walmart brand of go into a smaller town, cut prices, all the competitors can't stay in business because they can't compete on price. And then once they're gone, you can jack the prices back up. And so, are they doing things that are non-competitive? In sports, this is completely legal. In baseball, the New York Yankees have a payroll that's, 5 times larger than the Kansas City Royals and so forth. And it's legal to have differences of competition. But in business, there is supposed to be some equality there. What's tricky about this is, and what's weird is you talked about the breakups. If they were to break up Google, which I don't think will actually happen, they'll probably be fined or something. But if they were to break them up, meaning they spin off into multiple businesses, historically speaking, spin-offs are fantastic from an investing perspective. So what someone might see as, this is a negative, they have to break up their company and split into different parts. Well, historically speaking, spinoffs are a great place to start looking. Doesn't mean that all of them work out, but it's a good starting point. If a company's going to do a spinoff, there is the potential for more value to be unlocked from those, and historically speaking, have better returns than market average.
It's interesting. I'm going to digress slightly, which is some thoughts I've had with this industry in general. A bit of imagery. Imagine a diet of pure sugar and what would happen to a body if all I ate was sugar. Just I'm going to eat, Smarties. I'm going to eat gumdrops. I'm going to eat, licorice. I'm going to eat
with a fun dip chaser.
Yeah,
Let's
fun dip chaser. Imagine the malnutrition.
Yeah.
The malnutrition, the lack of substance, and what that would happen to a body. Well, our taste buds are not great discerners of nutrition.
Yeah.
We react very primally, at least I do, is, I go to the fridge because of how it makes me feel, not because I've made an evaluation of what's healthy for me. With the advent of screen time and the control over screen time, not having to wait for the big money movie on Friday night, remember that? Or, you watch the 10 Commandments with Yul Brynner once a year on Easter, right? Or what have you. The ability for us to control. It's fascinating that Facebook, Instagram, YouTube, TikTok, and even the AI is sugar for the brain. And imagine what's happening to our brains. And there's just absolutely no way that scrolling for a certain amount of time on TikTok or Facebook, whatever, at 10 seconds at a time isn't anything more than sugar that is squashing brains. So as these guys control what we look at and control those dopamine hits now, the amount of money that is at stake is formidable. And the dumber we can be, and the more we just are like children that will just say, give me another ice cream cone, give me another candy cane, give me another. The lack of discernment of what's going into our brains is a huge thing. And so the part of this fight with Google and these big companies are for the brains. And to be able to give them their sugar instead of someone else's. And the amount of money we're paying for that type of sugar, we're paying for it with our privacy. We pay for it with our information. We pay for it with our submission, and we pay for it with what's most important, our time and attention.
Yeah.
And that all eventually, time is money. So no wonder the fight for control over this is absolutely bitter and formidable. To say Google has a lot of sugar they feed people through the searches and through the tracking and through the information. It's really an interesting time to be alive.
And they do a good job of routing your attention back to their own products.
Mm-hmm.
So YouTube is a part of Google. Well, they can control, and this is part of, well, how do you do your advertising? Well, we just happen to put our businesses or our things that we want you to see in the front, right? And we give you basically your attention. We want it to stay within our business and within our company. And is it free competition? Probably not, because they can control those things. And who's not going to, within their business say, well, let's go ahead and put us at the top. No, of course they're going to do that. That's going to be their nature, is to say this will generate us more revenue. So the regulators are saying, well, you can't do that. You have to have freer competition. And, well, usually the big corporations seem to win out with small slaps on the wrist. It's not that big a deal. Like Microsoft, you referenced that one. It just wasn't that big a deal. They've paid some fines along the way. It's made them a lot more money than they've lost.
Speaking of dopamine hits and being entertained, my wife and I, we don't take I'm not a vacation guy. My idea of getting away is a weekend in Vegas, have some food, some fun. I'm not a gambler, but I love the shows, Cirque du Soleil and stuff like that. Well, we're regulars at Penn and Teller. I love those two. They're I love the humor, the personality. And Teller did an article. He does speak, by the way. Teller did an article where it said Teller reveals his secrets. And they just go through the deception of the magician. It says, these guys have been way ahead of neuroscience for hundreds of years. They understand how brains work. And one of the things that was profound that he said he referred to it as, quote, one of the darkest psychological secrets, unquote, is he said when people are given a choice, they feel they've acted freely. And so this idea of redirecting back is you feel like you're searching and you're making queries and you feel like you are the captain of the ship as if you're steering it.
Right.
And you're being steered the entire way. It's an illusion of choice. So that's a big deal. Well, let's finish up on where we think the Google, what's at stake, what's the timeline, how does this affect those investors, and then we'll take a break, and then we'll go to a bigger picture that I think this topic brings to the fore. But how do you trade? Like, if on the lower level, what the lower level guy is going to want to know is, how do I make money on this? And what do I own Google, or do I sell it? And, what's your thoughts on all that stuff? When these things happen, how do you trade your way through that stuff?
Well, for me, I wouldn't really react to this news in any way, shape, or form. The stock might get a little hit initially on, them opening up an antitrust investigation. Again, these have happened before. If you look back at the track record, if you had bought those dips in Microsoft, name the big large cap tech company, if you bought those dips, you did pretty darn well over time. But the bigger picture would be, let's say that it did go down the road and somehow, some way there were spinoffs, that would really have my attention. Otherwise, I see it as a minor blip. That the bigger issue for me for Google would actually be AI in that competition, because I think that has steered eyeballs where everybody used to Google for information. Now people are using ChatGPT and all these different sources. So that would be the bigger story, where I think the antitrust and things like that, they're interesting because there's some things to know about them and some opportunities, but we'll get into that after the break.
Noah, how do you trade an antitrust situation, or do you?
Well, there's some short-term downside risk if you get a knee-jerk reaction to that. And it's an interesting question because, I own some of that stock and I've got some positions on it as well. Downside risk can be controlled and managed with options if you know what you're doing. There's smart ways to do that and there's dumb ways to do that. And knowing the difference between the two is important. So downside risk controlled. I think the upside potential is also there as well because, what if the antitrust suit gets thrown out the window and then everything goes, all that fret was about nothing. So it could go either way, and you plan for both. But I like what Corey said is if there's a dip, that's going to be a huge opportunity. You just need to know what you're doing.
So if it's a short-term dip, is it a bear call credit spread, and then you buy that dip, and go long later? Or, do you do the bear call credit spread on the dip and then use that money to buy the dip when it happens?
Yeah, I like that.
What do you think about that?
Get paid some money to go buy a few more shares on the dip.
Because,
I like that.
You talk about 5 directions, not 2. That would, as long as it's far enough out of the money, maybe. I mean, those are dangerous.
For those that don't know the 5 directions, get into the Cashflow Academy educational side, and we'll talk it through all 5 directions and how statistically you can look at the 68% standard deviation and then the outside directions.
It's certainly more of a podcast when we say there's actually 5 directions things can go. And maybe even more than that if you count forwards and backwards. We usually do go forwards, but that's for another day, but for sure. What do you think? Bear call credit spread?
It's an interesting question.
Or you're going to do a ratio spread?
How about a 1x2 put spread?
1x2 put spread.
Profit like from the downside. Have short put down there to pick up some shares.
I don't know. You could possibly even talk me into a back spread.
Yeah,
a ratio.
It kind of depends on the timing. That's one of the other challenging is knowing that there's going to be a decision made at some point in time, knowing exactly when that.
We have known unknowns and unknown unknowns, and
in the meantime, owning the asset and easy enough to control against everything. A downside gap you can cover with like protective puts or something like that. Covered calls can limit your downside risk a little bit, but it gives up some of that upside potential. You get exchange opportunity cost for some protection. So, you kind of balance that out. I like the idea of maybe some cheap butterflies because then you don't have to worry about it. Yeah.
I love me.
And if you don't know what a butterfly is, you should check those out. They're pretty cool.
Check your insight stuff. So, that's interesting. We're spouting off all these trades. Isn't that interesting how, that's the difference between the educated and the uneducated. It really is if a person just turned us off because we're speaking Greek and they said, well, I'm done with this podcast. Look at what they miss. Because they don't have the jargon. They don't understand it. And they don't see the possibilities that someone who's educated does. And
multiple ways to profit from the same same outcome.
And it would depend on your situation and what your style
the bear call
is,
spread can work. The 1x2 can work. The butterfly can work.
Yeah, and they all have different risk profiles and different probabilities and stuff.
Well,
like
and
that.
I think that's really the difference between an amateur and a professional. Is an amateur might know one strategy, two strategies, but they can't account for any possible outcome. I could probably slap a opportunity in front of Corey and say, hey, bad news came out and Google's gapped down. What are you going to do, Corey? And he could probably spout off 10 different quality ideas and options. You have options.
There you go. So education gives options. When we come back, we're going to speak about what I think is the bigger picture. And this is really an excuse to delve into something that is far bigger. One of the blessings Robert Kiyosaki gave me in all those years I traveled with him is he would chew my butt because he'd say, Andy, quit going small, stay big picture. And when you see an antitrust, you think you're seeing something pretty big. It's actually the small picture. When we come back, I'm going to see if I can't take us bigger and show how a big picture actually changes what you do. And wouldn't it be interesting 5 years from now to say, gee, I never would have thought it would have been a discussion on the Google antitrust that would have changed my mindset in how I invested. So when we come back, we'll talk about what I think is a bigger picture.
To be here at this live event just brings it all together, and I've just gained so much more confidence just being here. Love the guys, love the program, best education, not just in stocks, just financial education, hands down. The most phenomenal team of teachers. They are genuine, humble, and full of integrity. They're real, and they absolutely make you feel like that they care. They're going to be there every step of the way, and they're just amazing. That's been my experience with them.
Welcome back to the Cashflow Academy podcast. This is where we make investing fun, simple, and real. And I'm joined by my good friends, Noah Davidson, Corey Halliday. Been speaking about this Google antitrust, and it's really about power and how fair or unfair it is when you see a concentration of power and a concentration of wealth. And that is a real bigger picture, because it's not Google. There are bigger concentrations than Google, and that's really the big lesson. As I've watched, at least in my short lifetime, we've watched a lot of the middle class dissolve, and we're seeing that more and more. I think it's really, really tough for young people, especially those that are maybe just getting out of college right now, to start their lives out. I think it's tougher to do it now in some ways, easier in others. They have more opportunity than ever before, but they're less educated and prepared for their world than ever before. And they are battling powers that be more than ever before. And the middle class, they talk about an income gap or an income disparity, to use Brooks Hamilton's phrase. The income disparity between the rich are getting really, really rich, the poor are getting really poor. The middle class is dissolving, mostly to the poor side. Mostly the poor side. So hard for a lot of people to get by, and that's going to continue as the demographics progress through time. So here's the thought. I'm going to submit that the problem is not an income gap so much as the problem is an ownership gap. And this is where the true antitrust that will never be broken up, and it will never be challenged, and it will simply get bigger, is that from where I sit from the investing chair, I see almost like the mass of a black hole. It gets denser and denser as it sucks more things in, and it gains power as it does it.
Oh, are you talking about the national budget, or what are we talking about here? Sorry.
Well, yeah, I'm talking about Vanguard. I'm talking about BlackRock. Mm-hmm. I'm talking about Fidelity. I'm talking about the people that own Google.
Yeah.
I'm talking about people that own Facebook. I'm talking about ownership. Yeah. So think about real estate this way for a moment. Think about real estate as a finite amount of land and buildings. Is on planet Earth, there are a certain amount of square footage, Hawaii tends to grow with a volcano, but that's not exactly developable in the short term. Developable. Developable, is that a word? In the short term. There's just a scarce amount. And so as people buy up that land, they gain control of more and more and more of what can be done. And there's a huge amount of power and control as they increase their share. Notice the word share, the operative word. They increase their share of what is available. Well, far more advanced, far more upside, far more powerful even than land. You know, and like virtual reality is far larger, you know, opportunity. You can own a lot of that. But bigger than that is, I would say, think of production in those terms. That if you look at a gross domestic product or a world product, right, of production, of things people want and need, there's a finite amount of things that are built, things that are manufactured, things that are eaten, things that are worn, things that are lived in, things that are typed on. There is a limited amount of production. And those that own the production hold the cards. They have what we call the more powerful posture. On a desert island, if you have needs and wants, food, clothing, shelter, medicine, you know, entertainment, whatever, it is the people that produce that control things. They're the ones that sit and get a tap, you know, stroke their beard and say, well, should I give this to you or not? And everyone that has needs is going to be, you know, competing for those resources, and the producers are the ones. Warren Buffett owns Burlington Northern Santa Fe. It's the ownership that gives them the power. What, you want to ship some steel to build a real estate project? How are you going to get? You going to fly it on a 747? You going to put it on the back of your bicycle? You going to try and put it on a truck? No, you need rail. You need rail. And so since that's a need, Warren Buffett says, well, a lot of other people need rail too. So who's going to give me the most money for what I can produce? Production is different than in real estate in that it is continuous. You know, it doesn't just exist once. It is continuous. So when you look at a conglomeration of who owns the production, that is the bigger antitrust. That is the bigger monopoly. That is the bigger issue. Because if you cry income disparity during COVID and say, oh, no one has enough money, let's print a bunch and let's throw it out and let's give to the poor. Well, it's the opposite of Robin Hood. You give to the poor, who in turn gives to the rich. Yep. Because all they do with that money is they go to Costco on Saturday and they give it right back to the people who are producing. All they do is go to the gas station on Friday and give it back to the people that are producing. And all they do is go to the movie theater and spend that money for the people that are producers and producing. So money gets sucked into people that own production. And as this happens, the idea of academic education gets harder and harder to be viable. Why? Well, I'm working for these people, and they have the ability to give me less and less and less as technology allows them to produce more and more and more. And so I have this choice to be enslaved to the producers or to become a producer.
Oh, come on now, Andy. If you meet your quota, we'll have a pizza party.
Not at my house. I screwed up the pizza. We had a calzone. We had one that fell apart, and I turned it into a calzone, and then we decided to bury it in the backyard.
Hey, the calzone.
Taps.
Noah and I went back there and looked at it.
We're going to tell the story, first of all. Andy is a pizza artist. He's got the pizza oven going.
Perfectionist.
And he has one pizza that becomes a little problematic, and he accidentally turns it into a calzone. And he's just dissatisfied with his work because he's a perfectionist. And he pulls it out of the oven and it's way too hot to handle. And so he just chucks it off in the grass. And Corey and I look at each other and we run over. We're like, we can save it.
They got CPR going on. And
we went over and took a look in the inside because we're like, if it's a calzone, the meat and things in the middle.
It was a meat lovers. But anyway.
But the point of this whole episode is the idea of antitrust and Google is just a lead up to the very fact that we're all operating in this antitrust world.
Yes.
Because we are, if you're an employee, well, you have a disadvantage to the employer, period. They set your wages. They get to tell you if you don't get to come in the next day. You are essentially beholden to them and what they set the rules as, right? And so you don't have that freedom. You like to think you have a freedom because you chose that job and so on, but really they're setting the rules. And that's kind of how the world works. And I love, part of what we love so much about Warren Buffett is because he went about his own path.
In Nebraska, not Wall Street.
In Omaha, he said, I'm going to be a quote unquote Wall Street bigwig, but I'm not going to have anything to do with Wall Street. I am not going to pay their fees. I'm not going to do this and that. I'm going to build my business here on the outside. And what's interesting is when Wall Street gets into trouble, they immediately go to Berkshire Hathaway and Warren Buffett because they know he has capital. So in the 2008 crisis, Goldman Sachs went and got $5 billion from Warren Buffett. Now, very good deal for Warren Buffett because he got guaranteed interest payments. He got warrants with that. Bank of America went to them for money. Even back before that, if you look back to Lehman Brothers and Bear Stearns, when they collapsed, they went to him. He was in Canada, and he said, send my secretary a fax, and looked at their paperwork and said, well, I'm not touching this. And that's why Lehman and Bear Stearns went under. But interestingly enough, if you kind of look at that aspect of it, the way that Warren Buffett grew big is the same way that we can grow big in our own way. It's by us separating from the powers that be and going about doing it in a way that where we avoid the fees, where we don't pay those things. Every year, there are people that spend millions of dollars. You've heard of this fundraiser that they do, have lunch with Warren Buffett, and it's an auction. And I think they go to Gorat's, a steak place there in Omaha. How much would you spend to have a lunch with Warren Buffett? You know, is it worth those millions? Those people think it is. And certainly spending some time with him as a mentor would be, I mean, it would be worth a lot of money. Yeah. And I consider myself incredibly lucky because, I mean, I would spend thousands of dollars to have lunch with Andy Tanner, and instead he makes my lunch for me. So,
that means I'm not very smart. Yeah, is what it means.
But I mean, that's the power of having a better path. And so, if you look at Warren Buffett, he talks about it. Avoid paying the fees. You know, you wrote a book, 401 Chaos. It's about avoiding those fees. It's about basically, if we're going to operate in the financial markets, we want to own producing stocks, but we don't want to pay 2% money under management, and we don't want to pay high commissions and this and that. And so all we're about at the Cash Flow Academy is figure out, how do you get paid to own the stock rather than you paying to own it? So I can go out and if I want to buy shares of Berkshire, I can sell a put and I'll get paid money to buy the stock I wanted at an even better price than it's at today. And so those things will take you to the next level. And it's about this antitrust, but getting into the producers and avoiding all the fees and the pitfalls.
I talk about this particular stock a lot on my podcast because I think it's one of my favorites that we have here. But I'm going to speak about production. And this is really important to understand profiting for production. I learned so much in my years traveling with the Rich Dad Advisor team, that 14 years. And one of the guys that I probably didn't learn as much from as he wished I would have, or maybe I learned more than he thought I did. I don't know. But I really respected Kenny McElroy because he's really a smart guy. And he was a good father, and he gave me a lot of mentorship. His sons are about 10 years ahead of mine, and I just really looked at him as one of those guys that just kind of knew what was going on, really trusted him a lot. And he has this thing called distributions, where the production of the asset, in his case a housing project, has a net operating income, the value that gives you cap rate. But he's going to send out a distribution, which is really a divvying up of the production. He's not a house flipper. He doesn't like the idea of buying low and selling high and paying the taxes, buying low and selling high and paying the taxes. He says, look, I want to build more and more doors. I don't want to buy a door cheap and sell a door expensive.
Yeah.
I want more and more and more doors, and I'm going to be short on the dollar. I'm going to use debt to do this, where I'm paying it off in cheaper dollars. I can refinance, debt or tax-free. I mean, it's just brilliant stuff. But that idea of distribution is important because it's owning the production. And I'm not relying on the sale of the asset. I'm relying on the ownership of the asset. And so he's building his own antitrust as he gets more and more literally playing Monopoly, literally playing the housing game of 4 greenhouses and a red hotel. Well, that is so nice because you have debt and you have tax benefits to that, but you also have a ceiling on it in terms of the amount one door can do. You have A, B, and C level properties, and A's are going to produce like other A's, and B. It's not like you're going to have all of a sudden a B that becomes a AAA 1 XX, what we call a 10-bagger.
Not unless it's got massive amounts of gold hidden in
something, or
hidden
you
in
build
them
it on
walls.
An oil well. Yeah, you build the thing on an
Jed
oil
clamp
well.
it, hit the
bang.
oil.
But with AI and production and business, you have incredible upside of production that costs so much less, leverage of OPE instead of OPM, other people's energy, other people's expertise, other people's education, other people's effort, other people's experience, other people's everything.
Yeah.
That the owning, what stock is really about is owning production. So when I look at ExxonMobil, I started getting interested in it about $55. I actually bought it at $55, and then I saw it starting to head down maybe a little lower, so I bought some puts. And those puts put my cost basis at about 44, 43-ish. So let's just call it, I'm in the low 40s. Well, back then their dividend was probably 80 something cents. Now it's $1.99. It'll be $1 next year. And if you say you buy it, let's just call it for easy math, $40 asset, and you got a $4 dividend. That's 10% a year as a baseline without the stock freaking moving. That's 10% as a baseline. I could give a rat's ass that it's 100 or 105 or 98 or 120. I give a rat's ass because I have a company that gives me 10% on the production forever. Now I add call writing to that, and realistically, that's 18% a year. I mean, that without a price freaking moving. That's ridiculous. That's awesome. And their policy over the last 40 years has been to raise the dividend every year for 40 years in a row. Now, that's not without risk. Neither is Kenny's business without risk. There's all kinds of risks. But the idea of owning an energy company that's that formidable, that's that big, puts someone in a different position. And you just try to get, like Prudential's another one that just the urgency of getting these when they're down low. And then the ability to accelerate that by stacking income and having the knowledge of knowing what that is. Kenny can add laundry. He can add vending. He can add things that will bring additional incomes other than rent that can stack on top of other covered parking, storage, whatever he's going to do.
So remember when I said in my introduction, I've had years of experience helping people take action. There's opportunity coming down the pipeline. And listening to Andy talk about this investment, it's not bragging. He's also talking about skills. Taking it from a 10% baseline, like you mentioned, to an 18%. Well, all of those things that you're doing, you not only invested in the company and the asset, you invested in the education, the knowledge, the effort, the skills, everything that goes along with that so that you can optimize that investment. Now, I think there's a significant amount of systemic risk out there right now. We've got AI is a disruptor. Mm-hmm. We have geopolitical uncertainty. Yeah. We got fiscal, debt crisis type scenario going on. There's a lot of systemic risk to the downside, which means that there's potentially one of the biggest opportunities coming down the pipeline. And my question is are you going to be ready to take advantage so you can catch that?
So you can get ownership.
Yeah. Because tell me how it feels to have ownership.
It's feeling, especially when you got the ownership at half the price of what it is today, right? That's the big deal, and people get discouraged. They think dividend, schmividend, average dividend in the S&P is 2 to 2.5%. Well, that's what it is today. Buffett bought Coke at $3.25, pays a $2 dividend. He's doubling his money every 2 years on that now because of how it worked, because he owns it. So, here's your problem if you're an employee, I think, is that you're working for money without owning anything. You're not adding to your asset column because school doesn't teach it. And it takes a certain amount of education and intelligence to become an owner of these things. So when people cry income disparity, I'm all for printing the money and dumping it out there, because all they're going to do is take it to Costco and give it back to me when they buy Heinz ketchup, right? The owning production is your key. And the reason this is more important now than it was, say, 20 years ago is 20 years ago, a person could make a good life as a worker. A person could make a decent life working at a factory. He could own a home. He could raise a family. She could do what she wanted to do. She could go be a lawyer and do okay. But that's getting very, very difficult to do now. And as technology changes, the white collar, whoever thought the white collar guy was the one that had to worry the most?
Oh yeah, he's a robot now. He's
well, I mean, if you say, I have a robot that can go out and pick strawberries. Now I'm worried about the blue collar. I have a strawberry picking robot, or I have an automaker robot. But now the robot doesn't need to have a body. It doesn't need to move anything physical. It just needs to think, and it thinks better than most white-collar people can think.
In the last 10 years, I can't tell you how many times people said, well, become a programmer, that's the future. And so they would have their kids, or, these would be the things that were like the hot items of everyone wants to get into programming. Now you can plug it into ChatGPT and it can program something just as quick as so
go put my Python and write my app.
Exactly. Right? And so the risk of being that employer or that employee, is at any point in time the world can change, and some of those skills or some of what you have invested your time and attention to can go away. But if you're a producer and if you own the assets that produce, that's something that can just continue to build and compound. It's like Kenny McElroy, when you were telling the story, well, as they have these housing units, you just picture it. If you have 10 houses and they're all paying you rent, over time you could use that rent to buy another house. Now you have 11 houses. Now
and the 12th one comes 10 times faster than the first one.
And so pretty soon he's just building more houses and more houses. So he has more doors. And that's all we do with stocks. When we make money on our stock investments, in many cases, we're all rolling it back in. Like there's what they call a DRIP, a dividend reinvestment plan. That's essentially what we're doing, because as I'm making thousands of dollars in the market, I'm going and buying more shares of additional things that then start to compound and pay me back money. And then I put that money back into more stocks, and it just builds.
But to the antitrust idea, how did they get so big?
Well, they got big because
they took yours.
Yeah, they're taking your share.
They took it.
Exactly. And so this wealth difference, it's just going to get worse and worse, because it's the biggest problem is it's an education gap.
We're seeing the hockey stick happen.
Yeah.
With BlackRock, Fidelity, Vanguard, we're seeing the hockey stick happen. What do we mean by that? Well, when you look at compounding, it starts out flat, but then it hits this hockey stick where it goes from a horizontal plane to more of a vertical plane, and that's like that's speed of light type
we
stuff.
Thought that 1 trillion was amazing. It was just a short time ago that a company hit 1 trillion market cap, and everyone went crazy.
Yeah.
And now, I mean, there's multiple companies over $3 trillion in market cap, 3 times larger. And so you just look at that hockey stick. It's not going to be very long before we're talking about, well, this company's at a $10 trillion market cap.
But how it happened is because of ignorance. Now watch this. If I'm in a 401 freaking K, and it varies, someone's going to say, I'm only 0.5% or 1. Even then, it's incredible how it decompounds your money instead of compounds your money. It places a headwind. 1% is enormous. If you take any amount of compounding and you put a lifetime calculator together, subtract 1%, that subtraction off the top has a deeper cut than any other percent you can take. Going from 9 to 8 is a 44% cut in your lifetime earnings, going from 9 to 8. Going from 8 to 7 is another it's a half-life. It's another 40%. So when Warren Buffett says 1% is enormous, if you take the best percent you have, that percent that gives you 44% of the potential wealth, and you take that and you give it to Wall Street, they get that 44% of the wealth.
Yeah.
So
You know what they're going to do with it?
they're going to buy production.
Start buying residential houses so you can't have one of those either.
You know, well,
Well, that's why they're shutting schools in my area. The
No one can
houses
afford a
are
house.
so expensive. Smaller families are not moving in. The amount of kids now
the high
in our
density housing areas.
exactly.
Kabam.
So they're shutting multiple elementary schools this coming year in my area.
400 grand gets you a box with no yard. I
Yeah.
mean, it's incredible.
Yeah.
You live in the Truman Show in these products,
Yeah.
in these projects, right? It's surreal how they've mass produced them. It's like living in the Truman Show. But here's the interesting thing. If you look at the 401k siphoning through fees, they siphon through fees a certain amount under the guise of providing financial services. All they're doing is siphoning. Now imagine if someone came to your house and just took a percentage of that square foot every year, right? A percentage of your square feet every year. You would have a half-life of losing your nest egg, and your job would be to build more rooms faster than they take those rooms. In other words, you got to beat their fees to get ahead, and even then you're losing that 1%. So let's say they use late John Bogle's number of 2.5%. They use his number from his book, Battle for the Soul of Capitalism, is the example he gives. Well, if they're taking from the masses their 401ks, they're taking your part of that production, and they're taking from themselves. Well, they're now compounding at a full rate. You're compounding at a lower rate. So where is that power and wealth going to conglomerate? It's going to conglomerate in Vanguard. It's going to conglomerate in Fidelity. It's going to conglomerate BlackRock, and those are the ones. It's not Google. It's the ownership of all these assets that is the true monopoly. Yeah. And the way to and why do we allow that to happen? Because we don't know how to buy things. We don't know how to buy things. We're worried about income disparity instead of ownership disparity, where the vast amount of production is owned by very few people. There's your concentration of wealth.
Yep.
And it's because of ignorance. It's because we're taught to go work for them rather than to be co-owners of this.
You're taught to buy things. You're just taught to buy the wrong things. They've conditioned you through years of advertising. You need this product. You need this thing we have. The producers
by production.
The sell the products.
By consumption.
And our educational system and our entire culture is based around consumerism. You need to flip the script. And like you say, get on the other side of the cash register.
Everyone's been buying Amazon products instead of Amazon stock. And that's the issue is ultimately they're trained to look on Amazon on the, Cyber Monday or something. Oh, what's the next big deal?
Rather
they
than
should
the
be
Black
thinking
Swan,
about
not Black Friday.
Yeah, they should be thinking about when there's the Black Swan event and the stock prices get massively discounted. That's your Cyber Monday. That's what's going to change your life. The little Roomba thing or whatever, that's not going to change your life. It's the discounts. That's what's going to change your life.
So
I'm not going to lie.
My
wife
Roomba's
loves
not
her
like,
Roomba.
I don't have a Roomba, but I'm glad it won't change my life because I don't have one. Look, as you think about this from an educational standpoint, this is where the satanic cult of advice, the culture of advice, is nothing more than as evil as it can be, because what it does is it discourages intelligence. It discourages knowledge. It encourages laziness. Just give me a tip so I don't have to do or learn anything. It increases laziness. It decreases knowledge. It decreases intelligence. And we pay for financial advice through fees, which is really, don't think of it as writing a check. Think of it as taking your potential production ownership and feeding their potential production. So, what'd you buy last week? Do you, we used all this jargon earlier, do you understand those trades? And not like on the edge of contagion, not that I'm aware of those trades. Are you proficient in those trades? Is there room for improvement in those trades? Is there room for improvement in learning about cash flow, taxes, leverage, debt, and ownership? Because every day a person goes without knowing how to buy things is a day those guys are going to buy it and you won't. And the way to stop an antitrust is not to sue, it's to buy them. Buy your share, just as Corey does, just as Noah does, just as Warren Buffett does. Get your share and learn to budget for buying. Whether, people buy on a credit card. Learn to buy assets on a credit card, because the asset can pay for itself where a credit card will not. So learning to acquire assets or the failure to learn the habits, discipline, temperament, and knowledge to buy assets on a regular basis is what allows the big boys to get this production. And that's the real antitrust. That's the real problem. And that's the one you face. 5 years from now, it would not be a bad thing for you to look back and say, who'd have thought a podcast on antitrust gave me the epiphany of saying, I don't have my share of this production. I have not been collecting and working for my share. I've been working for money instead of for assets. And in the case of stocks, it's just owning all this production. I would say, and I think Warren Buffett said it, that Berkshire Hathaway is now, in terms of production, equivalent to, say, 5% of the S&P 500. That's one guy. That's Munger and Buffett. That's one guy, two guys that have orchestrated a huge share of this production. And every time I buy their products, whether it's like yesterday, I put some Duracell batteries in a couple of AA's and ran out, and I put them in a remote or whatever it was. And I'm like, that's Buffett producing, and there it is. He's got the leverage. Where that? Well, luckily I own some Berkshire, and I thought I just made Corey rich because he owns more than I do. But ownership, and I would say that if you think about your choices today, what are you going to do with this podcast? What are you going to do with this information? You just spent time listening, which we're grateful you did, but what are you going to do with it? And will you be buying something tomorrow and getting smarter tomorrow, or no? Did it have an impact in your life, or was it just edutainment? Was it just interesting, or was it vital? And it would be a wonderful thing 5 years from now to say, boy, I started habits and knowledge. I changed the way I thought about the world because I saw that the traditional go to school, get a job, work for money, I see that opportunity shrinking in the housing I can buy, in the quality I can live, in the lifestyle I can live. I need ownership, because as that ownership concentrates through the big boys, that's why the rich get richer.
Yep.
Final thought.
Education and ownership.
In that order.
You need, because it's easy to be afraid to buy things, to make mistakes, to not understand the risk if you don't have the proper education. So the first investment is always the investment in yourself, because that's the one that's going to pay the most dividends over time. With that investment, you'll be able to do smarter, greater things. So education and investment, those are the two big keyword takeaways.
Final words, Corey.
Well, I talked earlier about how Warren Buffett has the auction for lunch, and I made a reference. I'd spend thousands of dollars to have lunch with you.
We got pulled pork after this podcast.
There you go. So I don't even have to spend it. But for the cost of lunch, you can spend time with Andy and the 4 pillars. For the cost of taking him out for a steak, you can go through his 4 pillars and learn about fundamentals, technicals, cash flow, and risk management. That's better than a lunch. That's 20 hours worth of lunch material that you can utilize. So we talked about, wouldn't it be great if 5 years from now you said, boy, this one podcast changed the trajectory of my life? The easiest way to do that is about the cost of lunch. Go through his 4 pillars program, and it has the power to change your life.
Or free at
or
yourinvestingclass.com for
even
free,
better,
for free. But I will say this with my final word on education, because that is the reason for these conglomerations. They know things that the other people don't know. It was a smarts issue. They were smarter And that's why it happened. It's all about who was smarter, not who was good or bad or evil. It was about who was smarter.
Yeah.
That's how it was.
Well, go ahead.
So the question is this: the other satanic idea is that education is a negative. In other words, people like when people say, "Well, I have to get educated. I have to do this," as if it was a bad thing. Education, when done in the right way, when it's fun, simple, and real, is actually an adventure that's enjoyable. It is the trading of the scrolling, the trading of the Netflix movies, the trading out of our attention for something that is actually delicious and enjoyable. Because even though there's candy, you can also enjoy nutritious proteins. You can enjoy a combination of a protein, a carb, and a fat and a vegetable. You can have a delicious meal that is very balanced and very nutritious, that's enjoyable to eat. You can have exercise that's a nice brisk walk. You don't have to bench 900 pounds and go crazy like my trainer believes you have to. You can have a nice walk and keep your cardio up and keep your blood sugar down. So when people start to see advice as the good thing, which is lazy and making us dumber, right? Just tell me what to buy. Call into Robert's show. If you had $10,000, what would you do with it? Well, I wouldn't admit that I only had $10,000, first of all. I would not admit that, right? I'd be embarrassed to call in and say, oh, I got $10,000. No. When you exalt education and say, hey, this could be fun, this could be a good thing, this could be a trip and a journey and a hike that's actually enjoyable to hit to a summit and enjoy every level up to the summit, that's when your life changes. So if education is, you better get educated or else, and I have to get educated, you'll never do well. But when you love learning and you love getting smarter and you love epiphany and illumination and hanging out with guys that are smart, your whole life changes. And then you begin to increase ownership of production. And then you have Prudential, and you have Exxon, and you have Apple, and you have Google, and you have all this production that begins to build in your life, and you receive distributions from real estate or dividends from stocks that are not 2.5%, but are 10%, 12%. In Buffett's case, well over 50%, because you've done it at the right time and you've done it consistently. Huge wealth. You had one more. I said last word, but you had one more.
Well, I would bet dollars to donuts you're watching this podcast on your phone. And this could be a prison where you're trapped scrolling, doom scrolling, or it could be a portal. Download our app.
That's pretty cool.
How about that?
Oh, that's a nice plug. So with that, we hope you enjoyed the bigger picture of it, because it's not about what Google owns and Google controls. It's what BlackRock, Fidelity, Vanguard own and control, and your opportunity to get your share, and there's nothing they could do to stop you. There's nothing they can do to stop you from learning how to own shares. You can learn leverage with no debt. You can learn the option game, and you can start, and you probably already know it's with what you know, and your opportunity gets smarter. There's so much now to learn. I can't tell you how much I've told my sons ownership is so important in your life right now, much more than it was for my folks' generation, my generation. The next generation needs to learn ownership, because then no matter who wins, they'll own it. No matter which AI platform comes up on top, you'll own it. No matter whether Google stays the same or whether it's broken up, you're going to own both. And as long as you own it, you don't have to work there. It's what Warren Buffett called the lowest level of participation in American business and doing it consistently. With that, we hope you enjoyed our program. We'll see you next time on the Cashflow Academy podcast. Click subscribe, click the like. Most important thing you could probably do right now, if not definitely, go to yourinvestingclass.com, download that, and start following the action steps where tomorrow will be different than today, and see if that doesn't lead you to increased ownership through education. We'll see you next time.